are joining in right now, what I'm going to do is wait around 3 minutes to give an opportunity to everyone to join. And once everyone's here, we'll be able to start the session. So today's topic will be extremely interesting. At the end of the session, you guys are going to have um, an awesome reward. So stay tuned till the very end. What I wanted to say, how's everyone trading week been so far? Oh, someone's saying they can't hear us.
Can you hear us? Test. Hi, everybody. Hi. Is anyone getting a crazy echo? Sounds exciting. Hi, is everyone sounds exciting? Daniel?
Anyone else get in a zero
No?
echo?
Great. Made several successful trades today. So far, so good. Clive, hello, everyone. Hey, Zoe.
Lovely. Well done, Matthew.
Fantastic.
Clear?
Clear. Fantastic. Okay, good. So audio, videos all good. So should we
start?
Should we start?
Wait.
People will.
Do you want to give like a few more minutes for people to join?
Yeah, sure. Yeah, we can wait. Yeah.
Yeah, we give a couple minutes. If you guys have had a good trading day today, type yes in the chat. If it was a bad day, type no.
No, yes, let's go. I'm just mixed bag.
Mixed bag, no.
Yes,
no,
yes, I know.
yes,
Okay. Wow. This is gonna be an interesting.
Yeah.
Hi, Rafael. Hi, Rafael. I'm seeing some new faces in the chat, new names in the chat, actually, no faces. So welcome to everyone.
It's going okay. Trade's still running. Lovely. As long as it's a profitable trade, I hope
good.
it goes in your direction. Last week was bad. Today was good. That is trading, Edward. And I hope that it continues to be good for you. All right. So we will start in 1 minute. Type in the chat, which country are you from? So we have an idea of where our traders are from. UK, Australia,
Poland, UK. Is that America? I'm seeing an America there.
Yeah, I'm seeing American flags.
Caribbean. Oh,
Caribbean, South Africa.
South Africa. Kia. Do you not have access to the fund? It shows no. South Africa, UK. Okay, I'm seeing a very UK.
Yeah.
In Caribbean, you're probably loving the weather right now. I hope it's hot and sunny.
Caribbean.
Yeah.
Brilliant.
UK, but from
We've
South
got
Africa.
a lot of people from the UK.
South Africa as well. Hey, Rupa, India. Fantastic.
Awesome.
All
right. So, guys, today's session, we are going to talk about market psychology. And this is a topic that has been on my mind. That is something that I go through quite frequently. So to start off, understanding market psychology and how it affects your trading on a daily basis is extremely important to figure out, so you can actually maximize your potential in trading, or maybe take a break, cut down on the amounts of trades that you're taking when the psychology is not going in your direction. So what I mean by market psychology is, if you are in sync with the markets, or if you're out of sync. Have you ever found yourself in a situation where most of the trades that you're taking are going in your direction and you're profiting and it's going great? And then let's say 3 weeks later or a month later, you start, every trade that you take is a losing trade, and you feel that there's something wrong with your strategy. There's something wrong with you. And then you start losing your confidence that you had for the previous month that you've built, because you had a really good month. And then the following month, bunch of losing trades. So you start feeling that you're not in sync with the markets. Is there anyone from you guys that is going through this experience currently?
Yes, been there. This is what's happening. Yep. Okay. Wow. Very relatable. Always.
Yep.
Yes.
Now, always.
Yep.
Awesome. So that is why I wanted to talk about this, because for the past 4 months, my trading, for me personally, I've been trading for the past 10 years. It has been exceptional. And the very last 3 weeks, I feel like I'm out of sync with the markets. All the trades that I've been taking, even though I would wait and they're good setups, usually my stop losses get triggered and then the price goes in the direction that I was hoping for. So it could be stop loss placement. It could be that market structure changes from time to time. Your strategy may not work as you hoped when it was like previously working. So what you can do about that is very simple. It's a very simple fix. It's basically not over trading, understanding that you are in this phase where you're out of sync is power in itself. Because once you figure out that you're out of sync, you will not force as many trades. You won't over trade. You won't revenge trade. And you know that your strategy is now not favored in the market as you hope. So just dealing with that psychological aspect of I'm not in sync. What can I do? Here's 1, 2, 3, 4, 5, 6 that I can apply that will help me out. So some of the things that I will teach you guys today that you can use in your trading if you feel that you're out of sync. If you're in sync with the markets, kudos to you. Keep doing what you're doing and keep maximizing your profits. For the ones that have been feeling the same, the same experience as me, this is what you can do basically. So I will share my screen with you guys. Please confirm if you can see my monitor. Bear with me for a second.
Good month, last month. This one not so good as a swing trader. Yes, very much that.
We will take questions.
Yep.
We'll take all of these things. I
At
want
the end.
people to, I want to look after our traders. This has always been our mission here.
Of course,
to help you guys get where you want to be. Can everyone see my monitor? Please let me see yeses in the chat if you can see it.
Fantastic. Yep. Or good. Yes.
Brilliant.
Great. Good engagement.
All
Thank
right.
you.
So you're feeling that you're out of sync. So for example, let's go to cable. So with cable, we'll choose the 1 hour time frame. We can see that it's been on a massive downtrend for the past many weeks. And then we recently went in a sideways movement right here, breaking above it, and having a nice little retest, breaking even further with another retest, confirming with this bull candle on the NFP day, confirming the uptrend to continue. We had a little pullback over the weekend. Even market opened with a little gap to the downside as a result of conflict in the Middle East. And then we've bottomed right around here. I basically was hoping that the price would rise from there because I saw that as a potential support level, hoping that we would fill in the gap and maybe continue lower or just go fill in the gap and continue higher. So that was my expectation. What I've done is have orders here, opened literally market orders at this level. And I was targeting this level of resistance, which we almost reached to today, but not quite. So when I opened my trade here, I was thinking, where can I put my stop loss? My stop loss was right below this level. So literally it was a 30 pip stop loss to get 100 pips. The 100 pips was achieved if I had a larger stop loss, but market took me out right here and then continued further. So when you feel that every time this is happening, so most of my trades have been, I would enter the trade, my stop loss gets triggered, but then, hours later, I would see that the market actually rallied. So my analysis is correct, but my timing of execution is wrong and my stop loss placement is also wrong. One thing you can do if you're going through that phase right now, instead of actually going and opening market orders, so you know that now we're in uptrend, every pullback you want to go and buy. Although this level is now a strong resistance, we had a massive drop, almost 400 pips from here. So I would not be buying at this level right now, but thinking about it realistically now, let's say every time you bought here at a pullback, you bought here at a pullback, you bought here at a pullback, you would have made 3 quality trades just following the trend. As you know, trend is your friend. So what you can do if you are going through the same scenario as me, instead of opening market orders, and let's say you thought that, all right, this level is where I'm targeting. You've done your analysis a day before. Let's say you don't see anything that has happened right now, and you are hoping to buy the markets. So we go back in time. Second. Apologies about that. So let's say all you see is that. So you saw that it bottomed here, did a pullback, did another pullback, and then when the market opened, the market was up there. So I hoped that the price would drop down to here for me to open my trade. So I opened my trade here, and then after that, I got stopped out. So instead of, when you're going through the phase that I'm saying, out of sync with the market, you have your strategy, you have your analysis. Instead of actually opening your trade as a market order, you instead go and open a limit. And instead of putting your trade where you actually wanted to execute, just always drop it by 20, 30 pips. So if I did 20, 30 pips lower with a limit order, my limit order would have gotten executed right at the bottom to have a full continuation to the upside. So that is one tip that you guys can use in order to kind of not force yourself into trades, and stick to limit orders when you're out of sync with the markets. And then once you feel that the market is favoring you again with your strategy, you can go back to your old style of, I'll just do market orders every time I want to open a trade. But when you're out of sync, wherever you wanted to execute a trade, 20 to 30 pips lower, at least your pending order will be lower. Your stop loss is also going to be lower, and it would have never reached. So you would have been in profits, even if you're holding till this day. That is one way you can kind of time the markets and kind of trade it in your favor. And that is what I personally do with my own trades at the moment, because it's not favoring me at all. So I hope this was helpful. I want to hear some questions, and then we'll move on to another topic.
Zoe said, can you say that again, please?
So Zoe, can you say that again, please? 20 to 30 pips. So basically, where I showed you where I wanted to initially, where I opened my market order, instead of opening it exactly at that right price that I wanted, I would say 20, 30 pips lower and just aim a limit order. A limit order could actually get triggered and may not, but if it does not get triggered, at least you did not lose anything. And if it gets triggered at a lower price, you at least enter the trade at a discount, and your stop loss is going to be lower, which gives you a higher probability of having the trade go in your direction. This is a really, I've applied this over the years when I would, sometimes I would build my account to a level where I'm very happy with. That was before the prop industry, type of thing. Just basically trading with my own money on a broker. I would build my account a large amount, and then my strategy is going perfectly fine. But then you feel that you're out of sync with the markets, and then everything I've made, I would just give it back, and sometimes even lose my initial deposit. So I tried to think of ways I can improve, ways I can develop myself when the market is not in sync with me, and how I can get in sync with the markets, or even trade, but not overtrade, not revenge trade, and take quality setups if it triggers my limit order. So instead of going to market orders, just a limit order protects you fully, and then you're right back in sync with the markets. Okay, so thanks. I understand now. This has been happening, so I'll try this tip. Thank you. No problem at all, Zoe. I hope this helps you. Are you certain you kept to your rules
and checklist?
Yes. So I never enter a trade without following my rules, without following my strategy, without following a specific level that I'm looking to trade at. If that level never reaches, then my trade is never going to happen. And there are certain criteria within my strategy that I follow that gives me confirmation to enter the trade. So if this criteria did not meet any of my any of the checklists, whatever you call it, my rules, there's no trade. And for me, there's no trade is better than losing money, because losing money is going to lead you to revenge trading, bad psychology, opening trades just to make that money back. And that usually just leads to more bad decisions where you end up losing the whole entire account. I'm new to Refund You Trade. There was coaching on offer.
Still is.
Yes, we do offer coaching. So in order to get access to your coaching sessions, you simply go to the website, click on events, scroll all the way down, and then you'll find book your coaching sessions. You can only book your coaching sessions once you've purchased your challenge. So if you've purchased your challenge, feel free to book coaching sessions. Yes, Vincent is awesome. Love the session with him. Awesome. Great news. Glad to be hearing that. Going back to market psychology. So with market psychology, you need to understand the market moods and cycles so you can understand whether you are in sync or out of sync. To understand the market cycles and moods, basically it's usually based on optimism, pessimism, or confusion. So with optimism, you usually see a positive trend. Everyone's happy. People are just buying the markets and making money. When it's pessimism, it's usually downtrend. Everyone's saying it's going to crash lower. People start talking about recessions. The economy is not doing well. Inflation data is, going off the charts. Interest rates rising. Cost of living increasing, so people are not happy, and usually it gets followed by pessimism, and you see the market going in a downtrend where people are short selling the market. And you have a confusion cycle where no one really knows what is going to happen, so you typically see the market going in a range for a week, sometimes up to a month or even 3 months, where it just goes sideways until it breaks out, finds a target to the upside or to the lower side. So understanding these cycles is extremely important. Before you go on any trade, you need to understand what sort of trend are we following. Are people optimistic about the markets? Are they feeling pessimistic, or are we in a confusion cycle? So the other thing, there are factors that also affect market cycles. So these factors can be market data, news getting released on a daily basis, political events. So, for example, a really good example of political events is what we've seen happen to gold and oil over the weekend. So, out of nowhere, a war erupted in the Middle East between, Israel and Palestine, and that led to a lot of uncertainty, where when there's war and uncertainty, and then you had the president of Israel coming out and saying that they are on a full-scale war. So that threatens a lot of investors. People feel fearful, and usually gold acts as a safe haven in times of economic uncertainty. So literally gold ended the week at 1829, and then it opened with a gap at 1854. So it was a massive move overnight, and no one expected it. Similarly, the similar thing happened with oil. So understanding that there are political events out of your control, out of anyone's control, you can't be trading that. You're not going to be trading after market hours. And then let's say you were holding on to a sell position over the weekend, and then suddenly you just got liquidated. I had some people reach out to me telling me, I don't know what happened in the markets. Literally, I had my stop losses at 37 level, but I got closed out at 54. How is that possible? Because the market gapped and it opened there. When the market gaps, your trade is going to get closed out, not at your stop loss level. It's going to get closed out at the next available price. And it could also go vice versa. So if there was someone buying before the weekend, and they just opened the position, the market gapped, they had their take profit at 1840, they're going to get closed out at 1854. So It's a double-edged sword. I always recommend people not to hold trades over the weekend unless they are in massive profits and the trade has been trending in their direction for quite some time, because you don't know what could happen. If the trade is just in a little bit of profit, just exit, go in the next week stronger, find a good setup, and then trade that way. So we discussed economical factors such as the GDP data, unemployment rates, inflation data. So we had PPI today. Tomorrow we've got core inflation data, a lot of important economical data that is going to get released in the next couple of days. So you're going to see a lot of volatility. Make sure that you have stop losses. Do not trade the news, trade after the news. When you figure out where the market is going to be heading, when you understand how this data is going to affect the markets. So that is the psychology of the market. And that is how you understand if you're in sync, if you're out of sync. A lot of people tend to open that trade 1 minute before the news. Why would you want to take that risk? It's a gamble. Gambling is not a good strategy in trading. And I'm going to give the floor to Alex to speak a little bit about his market psychology and how he understands if he's in sync with the markets or if he's out of sync with the markets, and how he's been dealing with it. So he came up to me and spoke to me a few weeks ago, telling me that his trading is not going the way he expected. He had a few really good weeks, and then his strategy was not working as expected. So when I told him about the limit orders, he started implementing that, and now he's getting filled in at better prices. This week has been a really good trading week for Alex. So explain to us, how did you find the limit orders when you're out of sync, and how you're feeling right now about, trading when you're in sync, when you're out of sync? Would you recommend taking a break and just, sticking away from trading for a couple of weeks, coming back stronger, testing out your trading again? Or would you still trade, but do limit orders?
Well, thank you Mo, so much for that. That's great. And yes, I did come up to you and say those things, and I wanted to just say that the market has been a bit of out of sync for me personally. I for the couple of weeks, but I've had the opportunity to use the limit orders where they filled me at better entries, as I didn't really feel very confident to trade, because maybe the trades won't actually take checking my checklist and my rules, but I knew it would have been a great opportunity because of what's happening in the market. So utilizing those tools gave me a successful week. Even though sometimes you can be a bit of answering, it's a bit of a give and take depending on your personality and depending on how you are as a person. I would say that if you're out of sync with the market and you don't want to deal with the volatility of the market, and you don't feel that you should be trading, I would say don't trade.
Yeah.
Personally, yeah, just take a break. You won't lose any money doing that. It will be much more healthier for your mental state, physically and mentally, to just take a break, analyze what's happening, look back, and also gives you the opportunity to kind of just backtrack to your older trades and see if you can improve and learn, because every single day we're learning, and I'm learning, you're learning, and that's important. And if I would say, if you're in sync with the market, if you are in sync and you feel that everything's been going right for you, don't fall into the trap of being arrogant to yourself, saying that, oh, I'm the best trader now, right? Because we've seen that
literally
happen.
getting to that.
Yeah, we've literally seen that happen before, where people say, oh, I've had 4 days, 5 days of good trading. I'm like, okay, cool. Yeah, and then it's like, okay, cool. And then the next day it's like, I lost everything. And it's like, interesting, because
where's your risk management?
Where's the risk management, right? Because your brain automatically sees like, oh, you see a win and you just increase, because you're gonna double and double and double.
Yeah.
And we've seen that happening even with people on funded accounts, where we look at the stats and we see people being up thousands, and they could just take a breather, breathe,
take your payout,
take your payout, enjoy it. Don't have to worry about for the next couple of weeks. We are living in a living crisis, so any money extra is more than happy and more than welcome in anyone's pocket, right?
Not and just then, that. Yeah, and then think about it. You've gone through phase 1. You've gone through phase two.
You've done the hard stuff.
You've done the hard stuff. You have now access to a funded account that can potentially give you an alternative source of income. And then you get so greedy that you lose the money that you make on your funded account.
And you blow the account and you have to start back again.
Exactly. So why would you, if you're up $2,000-$3,000, just think of your current financial, situation from one person to another. It is different. Some people can afford losing 100 challenges and they don't care. But some people, this money really makes a difference in their life.
Of course.
So if you think that 2,000-3,000 is going to make a difference in your life and you stop trading and you wait for your payout day, you get paid out, at least you get a refund on your challenge. You've made your payout and you're going to feel so much more confident about yourself that you've made something out of little money and you've got everything back. You're now trading risk-free. So to get to that level, like what I've seen a lot of people who would be at up 8,000, 9,000, even 12,000. And then they just continue to overtrade to get to the 20,000 and the 30,000 payouts. But then they lose everything. Why would you go through that? Look, in this industry in specific, you see a lot of companies posting payouts and a lot of traders posting 30 grand, 40 grand, 60 grand. Obviously, we all want these sort of payouts. However, you will not get there just chasing what someone else is doing. Your financial situation is different than their financial situation. His trading strategy is different. Their personality is different. And you will get there one day. It just takes time. It takes time to build to that level. It takes time to build wealth. Wealth doesn't come overnight. There are overnight success stories that happen to 0.0011% of people on earth, but you should not base your odds off of 0.001. Take the discipline route that takes time, but gives you success over the long term. And that's what I would always choose. Speaking of overconfidence bias, yeah, I'm the best trader. The market is so good. It's so easy to trade. Have you ever felt where you start thinking, oh, it's so easy to make money. This market is so easy. I'm so good at it. And then you see that the next day you blow up everything because you got so confident, you got so arrogant and so cocky about it. And then you just lose everything. So you need to control yourself. There's no one that is going to control you. The market has no emotions. You're going to trade regardless of what happens in the industry. If it goes against you, you're going to lose if it goes to your stop loss, and you're going to make money if it goes to your take profit. And for the funded traders in the chat, you guys need to take your profits. I'm actually tired of people telling me on Discord, hey, there's no payout yet. Yeah, I'm sorry because our traders are greedy. I don't know what to tell you, mate, because we have a lot of people that would get to the level of success. And I'm very proud and, very happy for them. But then they overtrade and lose all that progress that they've made. So when you get funded, when you trade, when you make profits, make sure you take it. I really want to emphasize on that because I want you guys to succeed. I want you guys to get to the level where I'm at right now. Because now if I lose a challenge, it doesn't matter for me personally. I'm literally going to go, analyze what I've done wrong and then come back stronger. At the end of the day, there's going to be months where you make money out of the markets. There's going to be months where you lose, and you have to prepare for the months where you lose. So make sure that you understand this very well, and share your experiences with us in the chat. Prepare your questions. In the next 5 minutes, we'll be taking questions. So the other thing that I wanted to talk about is the reaction to market movements. So reaction to market movements, basically confirmation bias. This is something that Dr. Joy and I spoke about. So the confirmation bias, meaning that, let's say an example about me. I looked at cable today and cable looked so bullish. So, but my instinct is telling me that cable is going to drop. And I looked at the news. People are saying there's a possibility of dollar strengthening. And I'm looking at the charts. All right. So the news are saying dollar strengthening. Social media people are saying that the dollar is now going to start rising. let me go and sell cable. Although the chart in front of me looks super bullish. It looks like cable actually maybe bottomed and it's going to start doing another bullish rally. But my confirmation bias, my inner instinct is telling me that I should sell. So I sell and I lose. Then after I lose that trade, I'll be like, oh, maybe it will sell from that level. And then you wait maybe 30, 40 pips higher and you sell again. And it goes even higher. And then let's say 30, 40 pips later, you're like, okay, this is a very strong supply area. It must go down from here. And then you sell again. And then you find yourself holding 3 positions at 3 different levels. They're all losing and they're in a massive loss, 3-4%. So you're forced to close your trade before you hit your daily loss limit because you want to save that other daily loss limit for another day. So if you find yourself in that situation, stop it. Do not listen to your bias, your confirmation bias, because it could be wrong. What you see on the news may not be accurate at the time, could play out later. So trade what you see, not what you think. And that is something I taught myself the hard way. Because I told you guys a story about myself when I was trading back with the COVID-19 crash, when Dow Jones, NASDAQ, everything dropped massively.
Bloodbath, isn't it?
Yeah,
Bloodbath.
Dow Jones dropped from 32,000 to 18,000. When the price pulled back to 24,000, I was like, oh, that's almost a 50% correction based on Fibonacci levels, Fibonacci retracements. Let me actually sell. So I started selling and stacking, and it goes against me more, and I'm selling more. And then that led to a massive loss and a very big financial harm to my career back then. But now I understand what happens when, there's a catastrophe. It doesn't mean that the market is going to keep dropping down. And when the market is rising, it doesn't mean that it's going to keep rising. The market goes through cycles. As we said, optimism, pessimism, or confusion. So once you understand which cycle we're in, you'll understand how to pinpoint better entries, where to exit, and where to put your stop losses. So the other thing is overconfidence. We spoke about the confirmation bias, how you shouldn't let your inner instinct, your bias, your inner beliefs dictate where you should be trading. We have overconfidence. We've also mentioned, for example, Alex coming to me, bro, the market is so easy. It's been so easy the last 3 weeks. And then last week you get smashed, but this week you're doing really well. Yeah. So well done. As soon as you get arrogant and you think it's easy, the following day, give it a day or a couple days, you're going to make mistakes because that's the overconfidence bias.
Everyone does.
So never think that you're too good. You're the best. Always stay humble. Approach the market with, neutral emotions. When you're winning, do not get super excited. When you're losing, do not get mad and pissed off. It's just going to happen. Like, you don't let it control you. If you win, good for you. If you lose, that's fine. Part of the game. Tomorrow will be a better day. And make sure when you're losing, you're not losing a massive percentage, because when you lose a massive percentage, that's when you affect yourself psychologically.
I would say just become numb to the market. That's what I say to what we've adopted in this market, is just becoming numb to the situations happening, because there's things that you can't control and things in the world that will happen regardless of what you're doing. So, a lot of people think that if I buy now, I'm gonna move the market. No, that's not the case. No one can move the market. The price is already set by the big institutional banks, and those are the people that move the prices based on the buy and sell. It's basically supply and demand. So the best way to do it is becoming numb to your winnings and to your losses. You want to become, as mentioned, as neutral as possible, to be able to understand the fact that the market will move regardless of what you're doing today or tomorrow. The opportunities today will be them. They'll be there tomorrow. Opportunities tomorrow will be there the next day, and the next day, and the next day. There will always be opportunities every single day. on different pairs depending on what you're trading.
Yeah.
Yeah.
I wanted to
Okay.
also mention loss aversion. Yeah. Loss aversion, guys, when you're basically preferring to avoid your losses, but basically you're not capturing gains. So you like loss aversion. Let's say I want to enter a trade, but I'm too scared to make a loss. And that basically the feeling of being scared to make a loss more than actually acquiring gains. So you also need to take risks in order to make gains. Do not, fear of losing, let it dictate how you should trade, because sometimes if you're too fearful of losses, you're basically just going to keep losing because your mind is just only thinking losses, 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 losses. And then when your mind is just thinking of losses, literally your subconscious mind is gonna keep looking for losing trades. And that's how you stay a consistent, losing trader in the market. So think positively and stay neutral. Look, this is an example I'm gonna give to you guys. If I come up to one of you guys and I want to give them $50,000, what are the emotions that you're gonna feel? Ask yourself. You're gonna be super excited. $50,000 out of nowhere, I'm gonna be super excited, right? But if your financial situation is really good and you are a good trader and you basically can control your emotions, if someone comes up to you, tells you, here's 50,000, trade with it, you're not gonna feel anything towards it. It's just gonna, oh, fine, sure, I can do that. But you're not gonna be excited. You're not gonna feel, it depends on your financial situation now. For some people, 50,000 is too much. For some people, a million is nothing. Literally.
True. The way I would say is to treat this, even if on stage you're funded, and I've said this to more before, is treat it as if it was your own money. Don't think of it, oh, you paid £200 or £300 or £500.
Yeah, and now I'm trading with 100,000.
Yeah, and you're trading like the way I treat when I do the funding accounts is I treat it as that was my own money out of my own pocket, and I've loaded that onto the account, and now I am willing to trade with that, and also it's capital at risk at the end of the day. So the way then how I approach the markets is how much am I willing to lose based on that amount, right? But you also have to remember there's rules and regulations put in place for each firm. We do have strict regulations because we want to make sure that you're consistent and profitable and risk manage, you're using proper risk management. But at the same time, 0.5% or 1% of that, or even a quarter of that, that's how much you should be risking on any account of any size. Proper risk management is how you are going to be able to stack up, compound your wins over time, because you're losing less and you're winning more. And that's why every trader should do. And someone did say in the chat right now, we should think of ourselves as risk management rather than traders, which is a fantastic point. Because at the end of the day, we are not traders, right? We're not like back in the 1980s in the trading floor, everyone's screaming down the phone like the Wolf of Wall Street. True. We're risk management. We're trying to compete with big institutional monies that are moving trillions every single day. And we're looking at collecting the difference in price so we can, make a few pips every single day, where that
literally collecting crumbs.
You're collecting even that, you're collecting less than crumbs. You're collecting like what? Ants. Like we're literally ants compared to them, right? True. 100%. So we're trying to compete with big institutional companies and have some life-changing amounts given to us, or look at the opportunities and make those opportunities for ourselves, which those amounts of money could change someone's life. Or that extra 400, £400-500 a month that's $6,000. If you were to make an extra £500 a month by trading on a fund, let's say you have a 300k account or whatever the amount is, and you just collect £500 a month as your profit, that's $6,000 a year extra. Yeah. The minimum, the average salary in the UK is 25 grand.
Yeah, 30 grand.
But depending on what parts of it, but exactly. That extra Mo, would you like extra $6,000 a year?
I mean, I would take any money.
Exactly.
At the end, look, sometimes I make like in my prop trading challenges, I make payouts because when I first started my prop challenges, My first consistent payouts used to be like 1,500, 1,500, 2,000, 1,000, just basically securing profits. Because I was thinking, okay, 1,000, 1,500 was really good money at the time. But then you see that you are good at this, and then you understand the value of money better. You're not risking anything out of your pocket. You literally got your refund back for the challenge. So I started aiming for a little bit more. I started going for 3 grand, and then you can do it every 2 weeks. So, and then after that, you can aim for higher. You can make 7, and then you eventually, all these guys that you see them making 70 and 80 grand from their challenges, from payouts, these people have been doing this for 3-4 years, or even 5, or even they've been trading for 10 years or 20 years. So don't compare yourself to others. Each one is in their own journey. And the best thing you can do is to focus on yourself, understand your current financial situation, and what is an amount that you can make that is conservative, that will change your life to the better. Once you get that amount and you get it withdrawn to your bank account, it hits your bank account, it feels different. I'm telling you, it feels different. Because as long as the money in your trading account, you're not going to feel the value of it. But once it hits your bank account, you're like, okay, this is real. And that's when it makes a big difference in your life. Prior to that, it's just gonna feel like, oh, I paid like what? And we're giving you guys the opportunity to get these challenges for cheap, because we want to help you, right? When you can get access to 100K for like 300 pounds,
Yep.
it's like nothing. You're trading with 100,000 potential, having 100,000 account. But then you think of it, I just traded with 100,000 out of 300 pounds. So you're not valuing the money that you spent as well as the account that you're receiving. That's why you guys are going reckless with risk management. And the last thing I wanted to touch on, because I want to take questions till the end of the session.
And then give them the surprise.
Yeah, the herd mentality. So what that means is that you find a bunch of traders doing one thing and you just follow them blindly. I'll do the same thing as them. Sometimes herd mentality can be a bunch of friends. You guys are trading, with a bunch of friends. They're all buying gold. You're like, I'll buy gold with them. And then you all get liquidated. So herd mentality, stay away from it. When everyone's doing one thing, you remember they were talking about Bitcoin at 65,000. Everyone's like, Bitcoin going to 100K, Bitcoin going to 200,000, Bitcoin going to 1 million. And that was the peak of the market. Literally, if I go to any country in the world and ask someone about Bitcoin, they know about it. So when you are in that phase and everyone's telling you to buy Bitcoin, you go and sell Bitcoin because you know that there's something going on.
There's something that people say is don't follow the herd, be different. So don't do what everyone else is doing.
Exactly.
You don't want to do that because you don't want to fall in the same traps as they would. You always have to have your own.
There are
your own path, your own way, and do your own analysis of whatever they're doing.
Yeah.
If it's the same thing that your mother used to say when you're young. It's like, if your best friend jumps off a cliff, are you gonna jump with him? Herd mentality, yeah. Right? But you know what? You want to stay away from that.
Or if you see someone who is very smart, a very well-known investor, a trader, you can basically follow his signals. You can do whatever, and then he goes through a bad month. He can stomach it because he knows how much he's risking out of his capital. But if you go through a bad month from his trades, you're going to lose your entire account. So think about that. Always remember, doing it yourself, taking the hard route, developing the skill, thinking over the long term is going to be key to success. Now is the time when we're going to be taking questions. There's a lot more that I wanted to cover about market psychology, but we can keep it for another session on Wednesday, such as, the impact of news and events on the psychology. We talked about how these data that come out will affect psychology, but I want to talk in depth about that. And then, we can do another topic over next week. But for questions, guys, type in your questions in the chat. Let's see what you guys are facing.
We'll be taking it for the next 10 minutes.
Over the 10 minutes, it's all going to be questions. So If you pass two challenges, can you merge the accounts? You are not allowed to merge at the moment, but we're looking into that option in the future.
Yes.
So let's say you have two 100K accounts and you want to merge them into 200. We might look into the possibility of doing that.
But you can't trade them separately.
Is there a chart on the system as
Unable to find one at present, a dollar chart. Steve, can you please
elaborate
a bit more on that, please?
Yes. And I also wanted to show you guys one thing about today's topic. With the WeFundYouTrade platform, we offer the opportunity to show you the market psychology in the economic calendar. So let's say for tomorrow, we've got high impact news. Let's say consumer price index, CPI, and then let's choose sterling against the dollar, cable, news sentiment. This is literally the psychology of traders prior to the news. So we give you tools that tells you about the market psychology itself. There's no platform that gives you that information. So make sure that when you're using our platform, utilize on all the tools and the data that is available to you in order to maximize your potential. News sentiment 1 day before the news. Who gives you that? That's about the news itself. It's not the market sentiment. This is the news sentiment. So 1 day before the news, you've got 74% people selling. You've got 26% people buying. If you come tomorrow, this data could change. Check the chart. What traders typically feel psychologically about this. So we'll keep that here. Next week, I'll show you more tools that you can utilize to help you with market psychology, and we'll carry on more with the topic.
Zoe said, what's your advice on trading two accounts in terms of management? I would say if you have two accounts and you're trading them, just keep your strategy and tactic across the both accounts. You can trade, you can have two accounts. It just, don't do something different on them. You just have to remember that whatever your trading strategy is, keep it consistent across your accounts, because that's how you should be approaching every market.
Absolutely.
You shouldn't be saying, you shouldn't have like another account and saying that one I'm doing Fibonacci and this one I'm doing ICT, because it's hard to manage and your brain will be overloaded. You overwhelmed. You want to stick to you want to stick you want to stick to one strategy and be consistent and be an expert in it.
Exactly. Also remember, if you have two accounts, you are not going to be able to trade the same market on two accounts simultaneously. That is a rule that we prohibit. So let's say you have a 300K account and you have another 300K. You can trade different markets using the same strategies, but don't do the same market because you end up getting breached. Can you reset a demo account to original balance if you blow the account? We do not have that option. If you blow up the account, you basically have to purchase a new challenge. Just the price of the dollar only.
Oh, so I think someone answered. Gregory said, "You mean DXY?" And he said, "Yes."
Oh, so you want to just check the dollar? I don't think we have that option, but that is a good suggestion that we will be able to add the information for dollar. We don't have dollar where you can trade dollar individually, or to trade euro individually, to trade sterling individually, so on and so forth. We have them across other pairs, so we might look into adding that in the future.
Zoe said, even if it's called Zoe, we see a question, and it's you're allowed to trade on two accounts with the same strategy but different pairs, different market, different currency pairs. You can't trade the same pairs. So if you're trading gold on one account and you're trading gold on the other account, that's a breach within our rules. You can trade gold one account and you can trade cable. We don't see an issue with that, correct, Mo?
Yeah, so if you trade gold on one account, you trade cable on another account, you close your cable trade, and you close your gold trade, you can go on the other account and open cable. Vice versa.
Vice versa.
But you just can't open gold on one account and gold on another.
You can't copy trade.
Exactly. Copy trade on two accounts simultaneously is not allowed. So we have how much time would you give yourself once you pass phase 1 of your challenge before you start phase 2? So this is a very good question. So when it comes to passing phase 1, I would say it's based on my strategy, based on the structure that the market is giving me. If I don't see my strategy playing out, if I don't see a setup that I'm confident about, I will not enter a trade until I see that. So it could take 2-3 days, could take a week, could take 2 weeks if I don't see my strategy playing out. And if I see my strategy, it could be the following day. Just as soon as I get my phase 2 and I see my strategy playing out and all my rules are set, I could execute a trade instantly. So it varies on my strategy, Kashif. And thank you for your question. Is there a maximum payout, for example, on a 50K account? No, basically as much money as you make on your 50K, as long as you don't breach any of the rules, the drawdown rules, you will be able to get paid whatever amount you make above 50K. With my previous charting package, I found the dollar chart useful. Steve, I agree with you. I personally look at the dollar index every single day. So the dollar index basically gives you an idea of what everything is going to do in the market. Not just Forex. You can look at dollar to understand what could happen in indices, what could happen to commodities, to gold, to metals, and other commodities. So I highly recommend looking at the DXY chart because it has a lot of valuable information to take.
Where do you find the dollar index, please?
You can find it on, TradingView. You can find it on different charting platforms, and some brokers do offer it. But with our broker, there's only Forex cross pairs. Is there a way to see what time a bar will close on the chart? For example, when the current 4-hour bar will finish and open a new bar. This is something that I've suggested to our platform developers, and they will be able to add that in the near future. There are a lot of things that we're working on in the background, and you guys will be updated with all of these changes soon. Now we have a leaderboard. We're also announcing a trading challenge that can give you rewards where you can win trading accounts for free. All you have to do is just sign up with your name, email, and number. So there are a lot of things that we have planned for you guys. Just stay tuned.
We're approaching near the end nearly. So should we give them the news?
Just
one more
a couple more minutes.
Yeah, sure. Go ahead.
I thought we were playing with no rules. So if I traded gold on both of the accounts and now have running trade, what shall I do? So we clearly state trading the same market simultaneously is prohibited. What I would say, just close one trade on one account, and maybe send me a message on Discord, send me an email, or send our live chat to provide you with my email. I'll have in mind that you've done this once. Just don't make sure that this does not get occurred again. Please show us how to use
the dollar index.
Okay, I will show that really quickly in the last couple of minutes.
Steve said, I like the signal sent on the package.
Can you set a trade to open? Can you set a trade to open a new trade at a certain level? Yes, that is called the limit order. I have showed at the beginning of the session how you can do that. Basically, the way it works really quickly, and I'll guys show you the. I'll be able to show limit orders, and I'll show the dollar index. So, for a limit order, you go here to the market, limit or stop. So choose a limit. And then let's say on sterling against the dollar, let's say I wanted to buy down here at 122.662. So I will put 1.22662 buy, and then I will be risking 1% of my equity with a stop loss. Let's drag this a little bit lower below this level, and a take profit up here. Let's do 80. No, maybe 120.
20 pips, yeah.
So I'm putting a limit order right at this level. Do not follow what I'm doing because I did not look and analyze. I'm just doing this for the sake of showing an example. Place. Oh, so not on the, I can't do that on this account, but I can do it on another account. So once you have put a limit order, place it. Basically, I breached this account in profit, literally. So that's why I can't place the trade. It's your trading account is on read only. That's what you get when you reach your challenge. So I went in massive profits. I got too greedy, went beyond the 5% daily limit, and I was in profit, literally 3% up. So I was at around 340,000 when I went all the way down. So basically, this is how you do the limit order. You just place it, and the limit order will be down here. If the price drops all the way down, triggering this order, you will be in the market, and your stop loss will be down here. When I'm risking 1%, I'll lose 3,000 on the trade to make 6,000. The other thing that I wanted to show you guys was the dollar index, which is really quickly. So if we go here, DXY, see on charts, you'll be able to see the dollar index and what is it actually doing at the moment. So if we go on the daily time frame, we can see that it dropped, but then started rising again. Who knows if this is going to get followed by another drop lower. I highly recommend that you do the analysis for yourself. But we are at a level of resistance, and make sure that you understand what is happening. This is also a strong rally to the upside. It could continue higher. No one knows what is going to happen for sure. At the end of the day, do your own due diligence, risk management, and follow your own strategies. The one thing that I wanted you guys that we wanted to announce for everyone who's stuck till the very end, we're going to give you a giveaway, basically 60% off on our challenges, only for the ones who are in the webinar. Use code 6460.
Yes, 6460 for 1 hour specifically after this webinar finishes. So this code expires at 7 p.m. tonight.
Exactly.
So make sure you use the code 6460. I'm going to put that in the chat right now.
Yeah.
And you're going to be able to get all of our challenges at a 60% discount, even though we're already running a 40% discount. So it's a massive discount for everyone here, because we've seen a massive support, a growth, and also interest and demand in all of our weekly webinars. And we wanted to reward everyone that's been able to make all of this happen.
Exactly.
So yeah, me and Mo were excited to be able to give you guys this 60% discount. So please feel free to use it.
It's literally for 1 hour. If you try it after, you're not going to be able to use it. And please do not reach out to me by email or by Discord telling me, hey, I tried to use it at 7:01, but I was not able to purchase. This is literally for you guys.
Very limited, yeah.
We want to incentivize all of our clients who attend our webinars, our trading sessions, to be able to get something out of it. So think of this as a present from us to you. You have an hour to use that code. Afterwards, it will expire. I hope this was helpful to all of you guys today. We will see you again in another session next week. And we will have our live trading session happening in the near future as well. So stay tuned for that. Thank you all for joining. I wish you successful trading and a lovely day ahead.
Thank you, everyone. Take care.
Cheers.
Cheers.
Bye-bye.